Welcome back to another daily analysis for the 15th August 2024. We're going to start with the US dollar index, which dipped slightly below 103 on Wednesday, continuing its downward trend for the third consecutive day. This drop followed by the lower than expected US inflation data, which overshadowed the stable outlook for the US labor market. The cooling in the PPI inflation fell to 2.2% in July, below the expected 2.3%, led markets to bet on a potential 50 basis point rate cut by the Federal Reserve in September. Despite this, the overall economic data suggests the US economy is still growing above trend, which could mean the Fed might not rush to rate cuts. Technically, the US dollar index remains in a weak pattern. The 14-day RSI is stable below 35, indicating ongoing selling pressure. The moving average convergence-divergence remains negative, and the index has broken below the 103 support level. The next support levels are at 102.4, 102, while the resistance is at 103 and 103.56. And then for the oil, it closed at around $77.6 on Wednesday, easing slightly after recent concerns about a broader Middle East conflict and strong global oil demand began to fade. The drop in prices followed weak US producer price data index, raising concerns about the future demand. Additionally, the IEA warned about potential surplus, just as OPEC is set to ease production cuts. So despite this, geopolitical tensions, particularly in Iran against Israel, provided some support for oil prices. Earlier this week, the WTI crude oil briefly surged over 3% to a near one-month high of $80.4 per barrel, making the strongest single-day gain of the year. However, speculative net long positions have fallen to a 2-month low. Technically, WTI has rallied sharply from a low of $72.10 on August 5 to a high of $80.4, gaining over 10%. Currently, the price is below the 200-day moving average of $78.15. If WTI falls further, it may drop to $77.64 or even $76.92, 38.2% Fibonacci retracement level. If bearish factors emerge, prices could revisit the $72 level. On the upside, maintaining above the 200-day moving average could lead to a retest of the psychological $80 level, with a potential target of 81.74, which is 76.4% Fibonacci retracement level. For gold remains under moderate bearish pressure, trading below $2,450 on Wednesday. Despite a weak US dollar following July's CPI data, mixed market sentiment is keeping gold prices from rising. Earlier in the week, gold saw a modest increase to around $2,465. Geopolitical tensions in the Middle East, particularly between Iran and Israel, may continue to provide a support for gold as a safe haven asset. However, expectations for a Federal Reserve rate cut are uncertain, with the Fed officials like Atlanta's Raphael Bostic expressing caution about easing policy too soon. Technically, gold is still in a strong position, trading above all its moving averages. The 20-day simple moving average provides support near $2,420. Technical indicators are mostly positive, with the RSI near 60, suggesting an upside bias. Gold is poised to retest its all-time high of 2,483.7 and potentially break the psychological 2,500 barrier. If prices fall below the 2,450 to 2,448 support area, gold could drop to 2,420 with the next support level at 2,400. The AUD-USD pair fell on Wednesday, closing around 0.66 after the Reserve Bank of New Zealand made a dovish decision. Concerns about a slowing Chinese economy, which could reduce demand for Australian exports, also weighed on the AUD. However, the Reserve Bank of Australia hawkish stance and mixed economic data from Australia helped limit the downside. AUD-USD has been gaining for 3 consecutive sessions, with recent data showing strong wage growth in Australia during the second quarter. This has led to RBA to maintain a hawkish outlook, keeping the cash rate unchanged to control inflation and signaling readiness to raise rates if needed. RBA Governor Bullock dismissed the idea of a rate cut in the next 6 months, emphasizing caution regarding inflation risks. Technically, AUD/USD is trading around 0.66 within an ascending channel, indicating a bullish trend. The 14-day RSI is above 50, confirming this momentum. If the pair continues to rise, it may test the upper boundary of the channel at 0.6675, with a potential move towards the monthly high of 0.6798 reached on July 11. On the downside, support is seen at 0.66, followed by the 9-day moving average at 0.656, and the 38.2% Fibonacci retracement level at 0.6519. And that is all for today's daily analysis. Thank you for watching, and don't forget to like, subscribe, and comment below.